Amidst a sea of red all across the board and one of the worst starts in the stock market and the bond market in decades, where can you put your money right now for a safe investment that actually yields a respectable percentage to beat out inflation? Savings accounts, CDs, and money markets are still paying embarrassing rates. Real estate is still over competitive and is reaching bubble level status. So where can you put your money? In this video, we'll go over how to achieve an almost 10% return risk-free. In this environment, it is unheard of, and this is a great place to park some of your cash. So let's get right into it. If this is the first time on the channel, welcome to The Traveling Trader. Happy to have you. So the risk-free asset that I'm talking about is in the form of a savings bond. And before I lose most of you rolling your eyes in boredom, this type of savings bond actually yields almost 10% now. We're going to be talking about a particular type of savings bond. But first, it's important to understand what a savings bond is. Everything will be included in the chapters below. Feel free to skip forward and backward as you like if you already know some of this information. A savings bond is basically just a loan that we give to the US government. Yes, we can loan the government money. The government will then pay the bondholder interest until he or she decides to cash the bond out or hold it until maturity. Now, there are two main types of savings bonds. There is the much more popular Series EE bond, which most people are familiar with. And then there is something called a Series I bond. Now, this is poignant and significant for this time that we're in the markets because this is an inflation-adjusted rate. And right now, inflation is going crazy. So the Series I bond is paying historical levels, but earning almost 10% in this type of environment when there aren't many places to put your money and your money is getting eaten up by inflation in the bank, makes this type of asset something to consider highly. So currently the Series I bond, the new ones that were issued in May, are paying 9.62%. Now, this rate is good for at least until October 2022 when the new rate is announced. Now, this new rate can be higher or lower than 9.62% based on what inflation is. If you're wondering how the rate is calculated, it takes what's called the fixed rate, which currently is 0%. The semi-annual inflation rate, this is set by the government, is 4.81%. So the composite rate, which is the 9.62, is determined by taking the fixed rate plus 2 times the semi-annual inflation rate, and you end up with 9.62%. Now, before I get into how you actually buy this bond and take advantage of the historically high, almost 10% rate, let's get into how do you get paid for this bond and what is the term of the bond. As we alluded to earlier, the interest is compounded semi-annually, so you get paid twice a year depending on what the composite rate is. Every 6 months from the bond's issue date, interest on the bond that is earned in the previous 6 months is added to the bond's principal value. Now, a Series I bond typically matures in 30 years. However, yes, you can cash the bond out early. You cannot, however, cash the bond out before 12 months. So 1 year has to at least pass before you cash the bond out. And if you cash the bond out before 5 years, then you will lose the last 3 months of interest. Now, let's say after October, inflation drops and the new adjusted rate is 7%. Well, how do you calculate your annual interest? You would just simply take an average of the two. So if you earn 9.62% from now until October, let's just say the new rate is 7%. Right? You take that and you divide it by 2. Well, your annual interest is still 8.31%, which is amazing. Now, you don't actually get this money in cash. You have to cash out your bond in order to get the interest accrued. This, however, is compounded and stays with the principal of the bond for as long as you hold the bond for. Just remember that you lose the last 3 months of interest if you cash it out before 5 years, and you cannot cash out the bond before 12 months. All right, and before we get into how you actually go about buying them, how much can you invest in a Series I bond? Because obviously there are limits, especially when the government is giving you a very juicy interest rate. For yourself as an individual, you can only invest up to $10,000. Now, you can get an additional $5,000 if you use your federal income tax refund, assuming you do get a refund, to invest in what are called paper bonds. Now, if you're married and have kids, yes, you could buy $10,000 for each individual in your family. So you could buy one for yourself, for your husband or wife, and you could buy a $10,000 bond for each of your kids as well. Moreover, if you have an entity such as an LLC, you can also buy $10,000 worth of bond for that entity. Do you need to be a US citizen to buy I bonds? Technically, you actually don't. However, you do need a social security number in order to create a Treasury Direct account, and we'll talk about how to buy bonds in a second. But you need to be either a US citizen or a U.S. resident with a social security number, or a civilian employee of the United States. So you could be a citizen of another country while maintaining U.S. residency status and still buy I bonds. So how do you go about buying I bonds? Well, the difference between savings bonds issued by the full faith and credit of the United States government. And other bonds is that you cannot buy these types of bonds from your brokerage. So while you can invest in other types of treasuries and corporate bonds through your brokerage, you actually have to do this through the treasurydirect.gov website. Go to treasurydirect.gov, open an account either using your social security number or your LLC's tax ID number, and follow the directions there. It really takes minutes just to open. Now, you will need a separate social security number or tax ID number for every entity or dependent for whom you want to buy bonds. You can also gift Series I savings bonds to any entity or person you like, as long as they have not hit the $10,000 limit themselves using that same social security number or tax ID number. One thing to note is the value of your bonds can never decrease, meaning if you put $10,000 in, you will never earn less than $10,000 at the bond's maturity. Hopefully this video was helpful. If it was, leave it a thumbs up. Leave any questions that you have in the comment section below. I would be happy to help you guys answer any questions you might have that I may not have covered. If you want access to our private investing and trading group, link is in the description below. There should be a coupon code there for almost 30% off the monthlies. That should still be valid depending on when you're watching this video. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.